Hello and welcome everybody to the Credit Connection. I'm here today with Jen Oliver. Welcome, Jennifer.
Thank you. So excited to be here.
Yeah, it's great to have you on. Now, I knew you way back in the day when you were at South Bay, right? South Bay Credit Union, in California. You made a little trip over to Municipal and then back to the West Coast. And currently at the $1.24 billion Rise Credit Union. Welcome. And why don't you tell a little bit about yourself? And I know you guys also did a recent rebrand, so talk a little bit about that as well.
Sure, sure. Well, thank you so much for having me. As you mentioned, I have an interesting background. I started at I've been in credit unions for like 30 plus years now, multiple credit unions. But I was really a part of a $150 million credit union, South Bay, $150 million asset size South Bay Credit Union, serving our South Bay community in LA. And it was a wonderful credit union that did some amazing work in the beach cities communities. Then I went to the Municipal Credit Union. That was the largest conservatorship in the nation. And I was part of the conservatorship management team at that $4.5 billion credit union. And oh my gosh, Sarah, I'll tell you what a way to reconnect with the roots of why we do the work that we're doing. It kind of, I mean, it's one thing to do a conservatorship, when they basically the NCUA comes in and says, all right, we're taking control over this organization, and they brought in their own team, and we were part of that team. Our job is to fix things very, very quickly and to bring the safety and soundness back to the organization. So you can imagine a credit union of that size, there was a lot of work to do in those operations. But to add to that, it was during COVID. We had no idea this was going to happen.
Mhm.
When you are saving a credit union for 600,000 of the first line of defense in New York City,
Mhm.
ground zero for COVID, boy, it gives you a whole nother charge of what you're doing and why you're in this business and why you're so passionate about the credit union movement. Flash forward, we did the conservatorship. We were able to give back the credit union to the members, which was a joyous day, to really see that success play out, and that really important financial institution survive, for those wonderful people in New York City. Flash forward, I came to then SCE Credit Union. We were just approaching $1 billion, and that was in 2022. And we have been on a path, a journey to really, not only survive but thrive in this credit union world that we love so much. And so at SCE, we changed our name to Rise Credit Union in June of last year. So it's really only been less than a year since we've been Rise Credit Union. And it feels so natural. It's such a great fit, being part of the community that we serve. And so this has been truly a pleasure to reacquaint yourself with why this credit union exists. And our brand is all around why we exist and who we're here to serve.
As it should be. That's awesome. So what were the differences that you saw, or was there anything that surprised you between $150 million credit union, a $4 billion credit union, $1.5 billion or $1.25 billion credit union? What are some of the differences or things that kind of surprised you or things that were the same?
Okay, so I'll be honest with you. At the $150 million credit union, we were forced to be super advanced in technology. We had to think different. We did some different stuff in outsourcing. You know, Smaller credit unions have a difficult time attracting talent, just because, a bigger credit union has different options and more options, and it's more appealing, right? So those were, some of the differences really was in the ability to attract amazing talent to the room. When you're a $4.5 billion credit union, people know your name
Mhm.
already, right? And so when we put out a call, even in a conservatorship, which is really scary time for a credit union, right? We would put out a call for leadership, and we got some amazing people step up. to become part of the team. And so you find that you don't have to work as hard. Well, you still have to work hard, but you don't have to work as hard to get good people in the room to help you move things forward in a great way. I'd say more than the differences were the things that were the same that I never expected. So from a strategic level, the skills I had already learned of being $150 million credit union, you have to be kind of scrappy to be $150 million credit union and do a great job. And those skills really applied to having to be more scrappy in an environment that's $4.5 billion that needed operational support. And so I had a lot of those direct skills really applied to being able to help us be successful at Municipal Credit Union. Same thing here, coming to this credit union, looking at Rise, looking at what Rise needed to move forward strategically was still very similar to what other credit unions also are trying to solve for. They can't get the word out. They're not great at telling the story. They may have lost connection with their members or their community, or they're broadening their community, how to really connect with that community. Those are the same problems we had at $150 million credit union. $1 billion credit union, $4.5 billion credit union. It's all about the messaging and getting people to really connect with our mission.
Right. And the brand, of course, is a very big part of that. It's not just a logo. The logo represents who you are. But yeah, just being out in the community and all that kind of stuff. And you were talking about municipal and serving the front line of COVID. I didn't even realize it was during that time because it's been a few years. But yeah, that's huge. And obviously putting the brand out there as being supportive during that time, even when it was going through its own stuff, it really shows what credit unions are for, right? No
Yeah,
matter the
leaning into that
size.
mission.
Yes,
Yeah.
no matter the size. So you've been an avid participant in the Mitchell Stankovic Underground. Why are you participating in it? What does it mean to you?
Well, I participate in a big way. I believe in participating in our movement. Some things scare me a little bit in our movement. It's shrinking. I mean, that's a fact, right? And so I'm always looking for the alliances, the village that helps me think better, think differently, think about how we can survive. And what I like about Mitchell Stankovic and the Underground is it really was a different narrative. Like it wasn't your typical kind of conference talking about the typical things. You know, it there you're encouraged to have really I don't know, just uh, different. You're encouraged to cuss. Like in actually this last conference, we had to say bad words. To see Bill Cheney say a bad word,
All right.
it kind of floors you, right? Yeah, and it's not that we have to say bad words in order to make things happen. It's that thinking differently and thinking with different boundaries allows you to open up your mind to different opportunities. And so I look forward to those types of challenges to the status quo.
Yep, yep. I love those too. Just trying to look at how we can help support smaller credit unions in different ways, for example. And so you've been a part of the Underground's CUS working group. Now, CUS, damn it, is actually stands for Credit Union Shared Services. So tell us more about what y'all are doing.
Yeah, so I've been part of the working group for since day one, and I'd like to say I was part of the idea around what we needed to do, because I'm very passionate about helping credit unions survive, and coming from a small credit union, I realize how much support is needed, and so we're constantly looking for ways to provide the additional kinds of supports that credit unions need. And quite frankly, at $1 billion, we're small these days now too. And so
Hmm.
it takes a different type of community focused on a larger, broader problem to come up with some great solutions. And so that's why I decided to be part of that working group and bring my experiences both as a leader from a small credit union and a leader from a medium-sized credit union, and somebody who had some experience at a larger credit union, to bring those experiences to the table, so that we could help create a network that could really be effective.
Yeah, it's amazing what we call a medium-sized credit union nowadays. When I started in 1999, it was probably like 120 million or so was a mid-sized credit union. So one of the things that your working group found was the largest hurdles for small credit unions, and probably we might have been able to guess this, but technology, 44% said that was the biggest concern. Others said education and compensation; those were kind of second and third, or tied for second, as far as hurdles. And then there were some others, including branding, like you kind of mentioned earlier. So it seems to me, I don't know, is the technology hurdle a lot bigger at a smaller credit union, or it seems like a lot of credit unions, regardless of the size, really can have difficulties keeping up.
Yeah, I think the state of our technology and our industry is, look, I'm sorry, some of our systems are dated and they kind of slave you to the system. And I don't think that's a great partnership, no matter how you look at it. So, I think that in general, the technology can be a tremendous hurdle on how to solve for that so that you don't have to be reliant on necessarily one partner. And or if you're relying on one partner, that you're getting the most flexibility that you need.
Mhm.
A lot of what I believe in for credit unions is, what makes them special, what is their niche, right? That's what makes them really special. But sometimes in these larger systems that kind of homogenize you, like everybody's got to be the same. And how do you start to identify your new unique attributes in the way that you are supporting your membership?
Mhm.
And I don't know that all the systems are flexible enough to do that. And so technology can be a real big hurdle for that. Even, I think we've all changed the way that we embrace fintech partners in this ecosystem. But sometimes connecting to those fintech partners can be very, very difficult as well.
Right.
So even if you have a partner that has the right solution for your unique membership, you might not be able to roll it out because you don't have necessarily the infrastructure or the connectivity or the ability to be able to do that, or the knowledge to be able to necessarily tie those things together in a roadmap, or the financial constraints to do that as well. So there's
Yeah.
lots of reasons, but technology can be a tremendous hurdle.
Hmm. And one of those service providers was down last Friday. I
Yeah.
won't.
Ouch. I know. Ouch. Massive, massive systems outdate. And that is really, it makes people feel less confident about their financial institution. And the bottom line is that we already have a reputation as credit unions of not having the latest technology. And then the whole system goes down, whether or not whose fault it was. If
Right.
they can't use their system, they blame it on us, right? And
The
so,
person in front of them, right? Yeah.
yeah, exactly.
Could make a little yellow brick road to the vendor. Anyway, so the working group produced this white paper that is available. We'll put a link in the show notes. But the white paper, and one of the many things that came up in it, was cybersecurity and reputational risk. Because even though it does tend to be like a smaller credit, well, it's not a smaller credit issue, but the white paper itself is about supporting small credit unions. So, but even though each of these credit unions are small, it's $80 billion in total assets. So it's a huge strategic concern too, and regardless of the size, I would think.
Yeah, yeah, absolutely. And the reality is, hiring the right talent to be your champion of security and cybersecurity at a small credit union is really, really hard. Now we can lean into partners, and there's some amazing partners out there. But how much of it do you actually have to be able to have internally in order to be able to do that? I think that the opportunity that Cuss explores is fractional leadership in that way.
Mhm.
Because strategically, you have all the credentials and the skills to be able to solve for a good, strong security system. That can't be, it may not be 100% of every scenario possible, but you have the skills and capability to pencil out a really strong environment. Well, you can now apply that skill to multiple credit unions. Just as I was kind of alluding to earlier, when I went from a small credit union to a large credit union to a medium-sized credit union, a lot of the strategies I had experienced were very similar. And it gave me a confidence that says, you know what? These are big problems that credit unions need to solve. And once I have that ability to solve for that problem, I can translate that to multiple organizations. And so this idea around this fractional leadership for hiring that kind of skill base is
Mm.
really exciting.
Yeah, I mean, I can't imagine what a CISO or a CTO or CIO gets paid these days. And for a small credit union to be able to afford that, it just makes sense that they, to share, I suppose. And that's supposed to be what credit unions are great at too.
I mean, if you add on top of that, Sarah, how many of us have the same providers, the same loophole, I guess, like not maybe not loopholes, weaknesses in the system, or the same updates that have to be applied? It could literally be systematically applied to multiple organizations when you have that kind of setup. And I think that's really powerful to be able to do that.
Yeah, I mean, last year there was a simple patch that brought down a core.
It can
So,
happen. Yeah.
yes. I love the idea of the shared services. It makes perfect sense for credit unions, especially the smaller ones. Um, but I'm going to play devil's advocate. Why not just merge instead? Why do we need these smaller credit unions?
Oh gosh, because there's there's a reason we exist, and it's usually something special about us. Let's just say, this is an easy example. Firemen's Credit Union. When they started out, they were their peer firemen. So they came together to help each other out. They knew the nuances of that industry. I think of the things that make us really special and unique should be coveted. Um, I was just having a meeting with my business development team today, and I was saying what is special about Rise? We help invisible people become visible. We give them access, knowledge, and care that help them achieve lasting financial security.
Mm,
And that's tremendous. I absolutely believe there's a reason for us to exist. And if we're gone, if we're merged out, who
mm,
is going to take care of those people?
right.
Um, I have a special responsibility, and it's what we do every day. And my team feels that it's their responsibility to help those invisible people become visible, right? To
Mhm.
provide that access. And you know, is that cause going to be championed as you merge? Maybe, but more than likely not, because you start to make decisions for a larger, broader base.
Right.
Going back to municipal $4.5 billion, 600,000 members, but they all had something in common. They
Right.
were the first line of defense in New York City. And when the pandemic happened, they all had to go to work no matter what. The last thing they needed to worry about was their finances, right?
Hmm.
And that, so even, a $4.5 billion credit union is very unique for the people that they were serving, and they know how to serve those first line of defense. Going back to the firemen we were talking about earlier, in New York City, firemen are under the poverty line.
Mm,
It doesn't always happen, by the way, if you go to different parts of the country. In different parts of the country, firemen are very well paid, and it is a premium job. But in New York City, when they start out, they're under the poverty line. And so they need a different kind of level of support. So the things that are so unique about our credit unions, I think that's what needs to be preserved in a big way. Size doesn't necessarily gauge that that's going to be how you're different and unique. But certainly as you get larger and larger and larger, your base gets wider and wider and wider, and it becomes more difficult to serve
Mm.
those really niche communities, and it's no longer necessarily your driving force. And so I totally believe that we need to preserve as many credit unions as possible. Besides that, who wants to be in a business that's shrinking and dying? Like, we
Right.
want to be a
Yes.
business that's thriving and doing amazing work. And so yeah, there's multiple reasons why I want to make sure that we're surviving and thriving.
Absolutely. I think credit unions are the best financial choice. We just need to tell people about it in part.
I know, why is that a secret? Darn it. Like, it
Yeah.
shouldn't be. I can cuss on this. God damn it. Why is it a secret?
Yes, you are allowed. So yeah, I love the idea of the fractionals. And some of the things that were, I mean, a lot of it that was talked about in addition to the fractional executives was tech. We talked about tech. The one thing that I think is so touchy, and I think partly because of how everybody was raised back in the day, is the retirement plans or the lack of retirement plans, especially at smaller credit unions, because they either can't afford it or the board doesn't believe in it, or whatever the situation, the NCUA they don't it says you can't afford it, whatever it is. And that is, I mean, we're putting our own darn people into poverty
Yeah.
after they retire.
Yeah, I've unfortunately heard many stories of that. Especially on the smaller the credit union, the harder it is for a credit union to fund a SERP for a retirement program for their executive level. And the fact of the matter is, the smaller the credit union, the smaller the wages. And so when you're looking at a small credit union, and their CEO is making, $70,000 a year, and their credit union's never funded a SERP for them, how much can they really have for their retirement?
Right.
And so you literally see that they cannot afford to retire, unless they merge with another organization, right? And have a retirement kind of built in.
Mhm.
That is a really sad thing. And what I loved about this program, the CUS program, was that it actually talked about that. It's been very taboo in our industry that, I can tell you, when I was sitting at the $150 million size credit union, why are my brothers and sisters, selling their credit union?
Hmm.
I honestly just hadn't even thought about the fact that they had no retirement built up,
Hmm.
or little retirement built up. And they have done that hard work every single day for decades.
Yes.
And it was at the end of the road for them. And it was a real big realization for me that this is a problem that needs to be solved. I think for some, it was a great incentive to merge, and I think that if we could solve for that a little bit, we could potentially keep some of those credit unions that are different and really special, that are serving a special niche, that will be missed if they're gone.
Right. And I want to be clear too, like if a credit union needs to merge because of financial issues, like it is
Sure.
not, savable, of course, that's probably what's best for the credit union, the members, and the movement as a whole. Um, but you know, talking about, it's so hypocritical for a board to be like, oh, we want to serve our members and provide financial wellness, and then you don't provide financial wellness for your own people, especially the executive that got you where you are. Uh, so that's that. I'll get off my soapbox now. So I
You know what? It's a reality, Sarah, that isn't talked about a lot
Mhm.
in our solutions, and we see a ton of collaboration happening in a lot of different ways from the credit union industry. But that's been one that's been kind of, yeah, a
Yeah,
little touchy.
and it's a great area to innovate in too. A lot of people
Yeah.
don't consider non-tech stuff innovation, but we really could stand to, to do that. Somehow make it more affordable. And so I was curious too. I don't know if this makes sense or not, but I was wondering something like cuss, is that could that be in preparation for like open banking? Would that lead there eventually?
Yeah, It's kind of hard to say, but I'd say that you'd be further ahead on the curve if you had a partner behind you, like Cuss, for example, that was kind of leading in that technology. Um, could it be open banking? I suppose it could actually, depending on how open banking is embraced. But you know, open banking means your information is just getting aggregated out there somewhere, right? And that information is being shared in a different way. And I think that for all the credit unions to participate in the benefits and protect themselves against any of the negatives. You really need a partner behind you that's going to help lead in that area. So I do think there's some opportunities there, but more what I see is the ability to share services. And
Mhm.
and you know, I've been a big advocate for this for a very, very long time. As a small credit union, so I outsourced my whole call center. I
Mhm.
outsourced my whole collections activity. I outsourced my IT. I outsourced everything that I could except for actually helping the members because
Right,
of course I
right.
don't want to outsource that. I want my people to be the face of the organization that understands the individual nuances of my individual member. So where I really see the ability of the technology that kind of comes together is that it could create a pathway for us to share services, which is where you start to reduce your operating costs. Because there's a lot of things that should be unique to you. Your brand should be unique to you. Your marketing and curated content should be unique to your membership. You know, the words that you use, the way that you communicate to your members should be unique to you. But who processes your drafts? I don't think that has to be so unique, right?
Right.
You
Mhm.
know, even building an IT infrastructure, does that have to be totally unique? No, the infrastructure itself doesn't have to be unique. Some of your fintech partners might be unique, but certainly not the infrastructure that makes you nimble and able to adapt. Doesn't need to be unique. So I think by creating this collaborative environment that we're solving technology problems with will allow us to start to pull off what's not unique about us and maybe share in those services and solve for that, helping reduce operating costs, reduce labor costs. I don't know about you, but like I can tell you, coming from a small credit union, like I had to wear tons of different hats. Today I'm a loan officer. Today
Mhm.
I'm doing collections. Today I'm doing a teller work. Today I had to do all those things because you just had to show up and do what you needed to do to fill the gaps, right? And by allowing us to not have to worry about the technology and some of these other shared service allows us to now be there for our members and
Yes.
to problem solve in that way. And I think that that's pretty empowering for a credit union of any size.
Mhm.
Um, and I'll say that too, because like when you look at the amount of money Chase spends on marketing and the amount of money that Chase spends on technology, we could never compete as an industry with that
Right.
kind of dollar spend. So by coming together in these kind of tailored shared resources, now we can be as powerful, or hopefully, hopefully at least in the competitive range.
Mhm. And you know, there again, you still have that advantage of niching down to serve your particular members the best way that anybody can. So there's also been an increase in credit union applications, new credit union applications. That's pretty exciting. Um, and this part of that's part of what Cuss is doing as well, is to help support the smaller credit, they're the new credit unions too.
Well, yeah, yeah. The hardest part about a new credit union is, well, first of all, like, where do you go? Like, you know, I need every policy procedure. I need every operational, support. And then, by the way, I can't spend a lot of money, and I have to grow a certain pick at a certain rate, and set aside capital, since the only way the credit unions can, really fund capital is through earnings. And so, how are you going to start earning on day one?
Hmm.
Startups don't earn on day one, right? And
I
so,
worked with a few for sure. Yeah.
yeah, yeah. So the environment that Cuss can create is a village that helps you with what to do there first.
Mhm.
And again, that just leaves more resources for you to do the work that you need to do in order to have to truly, create a strong, thriving organization to be able to serve your unique niche. And so I think that the faster you have a village, the faster you have a trusted group of people that you can partner with, the better off you're going to be.
Absolutely. Makes perfect sense. All righty. Well, I always allow my guests the final thoughts. You can say anything you want to our credit union audience. What's it? What is that?
Well, shit. No, I'm kidding. I never get an opportunity to cuss, and it's all so awkward to do it. It just cracks me up that when Susan said that it's going to be called cuss, I was like, really? And now it's just so funny because it's a conversation starter. But anyhow, um, you know, my last word is, do whatever you can to help our industry not only survive, but to thrive. And that means if you are a credit union that needs support, that you go and you find your support structure. If you are a credit union that can help, that you help support your structure. Rise is putting our, I guess, money where their mouth is. I don't know, whatever you say when you're actually doing the work. We're partnering with some of the partners that we're vetting through the CUS model. We're also vetting through the RISE model, because if I could apply some of that here to RISE, well, gosh, if I pick up a whole village with CUS to help, facilitate some of these issues, I think we'll be better off as well. So, participate. I think that's the bottom line, is make sure that you're participating at every possible way, whether you're a small credit union or a large credit union or a medium-sized credit union, that you come into this network and you share your abilities, you share your strengths, and that you help others also realize their fullest potential as well.
Hmm. Excellent. Thank you so much for your time today, Jennifer. I appreciate it.
It's been an absolute pleasure. Thank you for having me.